Yeah, good morning, everyone. So yesterday we saw a very sharp bounce in the US market, mainly driven by what we feel is on account of inflation. The inflation figure came lower than expected at 0.4%, uh, versus expectation of 0.6% month on month. Apart from that, there are further positive news on inflation side as energy prices were continuously holding up. Now the coal prices has started correcting. In last 1 week, it has come down by around $30 in the African market coal prices, which were at around somewhere between uh, $213, which has come down to $183 in last 1 week. And even in last 1 month, it is down from $250 to around $183. So the big concern which was there of the high energy prices is coming off, and that is further giving impetus that the inflation can cool off in the coming period. Apart from that, one more positive news was that the Russia had said that they will be withdrawing their troops from one of the region, Kharm, and this has also acted as a positive sentiment for the market. And these all reasons came together and taken the market to a large extent higher, wherein bond yield came off very sharply, and that has supported the tech stock as such. Nasdaq was down even higher than the broader market, and almost down up by Nasdaq was up by around almost 6%. So that can act positive for Indian IT company as well. And lower coal prices and declining dollar index can support the metal stocks as well. So this stock can remain in limelight today's. So overall, Asian market are also seeing positive trend. Most of the Asian market are up by almost around 2 to 3%, and similar trend can be seen in the market as well. Commodity also, iron ore and steel are up by around 2.5 to 3% in Chinese market as dollar index has declined. So overall positive sentiment will see positive indications in our Indian market as well. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. After global cues, today market is on a gap up. We saw that last two trading session in profit booking in higher level, that is 18,400 to 18,000 is mainly like sideways profit booking. We can see that important level, but today's after gap up, if Nifty managed to sustain 18,370 400 level in closing basis and the weekly closing above 18,400, then we expect further rally towards 18,500, 18,600. That is all-time high, near the all-time high. But if Nifty failed to close above this important level and close below 18 to 70, then we see the again sideways momentum coming towards 17,900, 17,800 in downside and upside 18,400. So we closely watch today's closing. If Nifty managed to close 18,400, then we expect further rally towards new high. Bank Nifty also trading near the support zone, and Bank Nifty also managed to close above 42,000 and 42,900 above closing basis. Then we expect further rally towards 42,800, 43,000 upside. Support place around 41,300 first and 41,000 at downside. Nifty Finance also trading yesterday after two trading session in profitable trading near the important support zone. That is 18,600. If Nifty Finance also close and manage to close above 18,740 and 800 level, then we expect further rally towards 18,900 and 19,000 in upside. So we closely watch today's session. If this gap up and manage to sustain that gap, Then we expect further rally for next week. After gap up, again some profit booking. Then we see the range is 18,400, 18,000 and downside. Stock Pacific HDFC Limited looks positive at currently. We saw that last 4 to 5 trading session, trading in sideways momentum and trading above important level that is 2490. Do we expect is managed to close above weekly, then we expect further rally towards 2570, 2600 in upside, and support place around 2470 and 60 at downside. Godrej property also looks positive at current level. Almost monthly chart we saw that last 3 months they managed to sustain this level 1200 and 1180 at downside. We expect it managed to close above 1260 in weekly today's session. Then we expect bounce back in Godrej property towards 1470 in upside. That's it for technical derivative I can get.
Yeah, thank you, Vikas. Good morning, everyone. So, as per derivatives data front, we have witnessed that, as I mentioned in yesterday trading session, that once if Nifty goes below 18,000 level and closes below that level, then we might witness a sell-off towards 17,700 level. But we have seen that Nifty came up sharply, and we are seeing that currently there is, as per the OI position, the support and the resistance for the Nifty, as we are seeing that is quietly at 18,000 level and on the upper end towards 18,400 level. While PCROI yesterday closed at 0.86 level, while Nifty was down by 120, 150 points, then also we are seeing that the PCR yesterday closed at the same rate which was there on the Wednesday session. So currently PCROI is holding at the level at the current basis. Once if in today's session, if PCR closes above 0.92 level, and at that point of time, if Nifty also goes above 18,400 level, then we might witness the momentum to get continued on the upper level towards 18,600 to 800 level. Currently, we are seeing that the India VIX is continuously coming down to a 15.57 level, and we are seeing the India VIX directly came down from 20 to 15 level in previous trading session. So India VIX is also holding strongly. So currently, till the time Nifty is holding 18,000 level on the closing basis, till that point of time, we might witness some healthy momentum in the market. As I mentioned yesterday session, also that the premium for the Nifty is currently at 64 points. Whenever this kind of situation, the momentum will be very high in the market, and we might expect some big movement in the coming few 1 to 2 week session. So at this point of time, the best strategy for the market would be the long straddle or strangle at this point of scenario, because the movement from on the both side for next 1 to 2 week session would be almost around 600 to 700 points on the either side. So currently the strength looks positive with the support of 18,000 level. As per the stock specific, we expect the selective stocks like HDFC and HDFC Bank both looks positive, while from another sector from the pharma would be Lupin. Lupin yesterday shown a heavy OI positions getting added up around 700 to 720 strike. So currently till the point of time Lupin is holding 700 level. Till that point of time we might witness a strong momentum on upside towards the 760 levels. That's it from the derivative front. Thank you.
Yeah, I'll take up first as I took it for some meeting. See, Jindal Steel and Power came up with the numbers, and numbers were marginally ahead of expectations. Uh, Going forward from here, their cost will come down, specifically coking coal, though prices are remaining stable at Q3, Q2 average, so which reduced substantially in Q2, but the prices are holding up at lower level. But against that coking coal cost and iron ore cost is coming down, and now even the coal cost will also be coming down in futures. So altogether, will be adding up to the EBITDA per ton, and quite possible in the coming quarter, company can do EBITDA per ton of somewhere around 11,000 crores. 11,000 rupees per ton. At that 11,000 rupees per ton, and looking at the volume of somewhere at around 2.1, 2.2 million, company may do EBITDA of around 2, 2,400 crores in the next quarter. Uh, at that price, at that EBITDA annualized, the share is trading somewhere at around 6 times EV by EBITDA. So that doesn't leave much scope for price to move up from here in near term. But looking at the scenario, if suppose there are positive signs which can come up in Jindal Steel and Power, are that somewhere removal of export duty. Then second thing is their coal mine, which they won recently, can add up a good profitability in next year, not in this year, because those mines will come up for material from those mines can come up only in the next year. So that can add up to the profitability, and then we have to keep a watch on coking coal prices, which are quite volatile. So looking at all these things, near-term outlook is neutral, and the going forward for the future need to keep a watch on how the realization and coking coal and other cost moves. So near-term outlook neutral for Jindal Steel and Power. Then Suzlon has reported numbers, and the numbers were at EBITDA level, marginal improvement quarter on quarter, but order booking has improved good amount, and they had order book of almost at over 900 billion as of date, against 700 megawatt in last quarter. So that will bring up revenue in the coming period. Interest cost has come down substantially in this quarter with debt restructuring. The interest cost was at around 150 crore, which has come down to 96 crore, and that will further come down with the right issue money. And apart from that, a company had a forex loss in this quarter. Generally, company had a forex gain every quarter, but this quarter forex loss of around 38 crore, which has reduced the PBT. They had a write back of tax as such. Profit reported was around 57 crores and all. So looking at these results are showing some positive signs and can still continue to improve in the coming period, as the concern of the debt burden and debt are behind, and now company can focus on the business and can see the improvement in those activities. So overall outlook from here seems positive for Suzlon. Then small companies, Sangvi Mover has come up with very good numbers. Here they are basically into hiring of crane, and major revenue comes from 40% from windmill, and then from various other sector, oil and gas, steel, cement, all distributed. So revenue and profitability is consistently improving in last 2-3 quarters. Generally the rainy season, then monsoon season is off quarter for them. But even in this quarter, they had reported very good improvement in revenue and profitability. So that gives confidence for the future. Even the order book for the coming period has also increased in this quarter. So that will also indicate that the outlook coming quarter can be better. The stock at these prices is trading somewhere at around 6 times EV by EBITDA. So that valuation is also attractive. So overall outlook also seems positive for Sangvi Movers. I'll request Jehan to take up from here.
Yeah, thank you, sir. Yeah. On results in the banking and NBFC side, Muthoot Finance, the gold financing companies, result was in line with expectation. Challenge for Muthoot and Manappuram is that on one hand, there is lack of loan growth because of stiff competition from banks, and also their NIM is under pressure. Loan growth again this quarter was flat quarter on quarter. And even the customer base and gold tonnage both were down quarter on quarter. Management although expects overall loan growth to be at 10% by the end of current year. Spreads were largely flat on quarter basis, while they were down 300 basis points year on year, as yields were affected by teaser rate loans. Management said that now they are they have revised the rate upwards again, and yield should improve going forward. So there is possible that spread and NIM can improve a bit from here. So worst seems to be behind for gold loan companies. Credit cost was almost nil. That is never an issue for these companies. Asset quality robust. Until we feel that until loan growth accelerates back to 12-15% kind of region, and NIMs show some bounce back, until that time they will remain lackluster and remain sideways. Also, new normal ROE for these for Muthoot Finance. Earlier it used to make consistent ROE of 24-25%. Now the new normal will be at 18% because NIMs will settle at a lower range. So because of stiff competition. So we are neutral on Muthoot Finance. Muthoot Capital Services, this is the two-wheeler financing company. Result here was okay. We had earlier suggested this stock in our monthly picker also. Loan book remained flat at 2000 crore now at this number since many quarters. Disbursement was also weak at just around 300 crores versus our expectation of around 350 crores, indicating that loan growth will remain subdued over next 1 to 2 quarters. Another thing to watch out is that in rising interest rate environment, the spread may come under pressure. This quarter we saw spreads declined around 50 basis points from 10.7 to 10.2% because of cost of funds inching up. However, on positive side, the credit cost has now stabilized at 1.8% for second consecutive quarter, which was the same level pre-COVID. And also OPEX is coming under control. It declined quarter on quarter, and cost to income is at 55% versus the earlier range of between 60 to 65%. And because of this, the ROA has shown an increase to 3.6% against 2.8% in June quarter, which is commendable. And so we are getting this kind of ROA company at still at 1.1 time price to book. And we think even if growth may be delayed, loan growth, still it should get around 1.5, 1.6 times going forward, which was the case earlier. If in case the two-wheeler industry supports and starts growing in double digits, then it will act as a catalyst for loan growth for Muthoot Capital, and then the valuation can further increase. So we remain positive here. One IPO is opening today, Inox Green Energy Services, and it will be closing on Tuesday 15th. We have given avoid rating here. Issue price is 65 per share and total issue size is 740 crores. Divided equally between OFS and fresh issue. Inox Green is in the business of providing long-term operation and maintenance services for wind farm projects having stable annual income. It is a subsidiary of Inox Wind Limited, which is a listed company. It has an exclusive agreement with Inox Wind, where Inox Green will be providing O&M services for all wind turbine generators sold by Inox Wind through the entry of long-term O&M contracts between the purchaser of those wind turbine generators and Inox Green. Coming to the negative points, the Inox Green basically depends on single vendor, which is Inox Wind. And so is exposed to any risk faced by Inox Wind. If we look at Inox Wind financial, it is consistently making losses since last many years. And even Inox Green has been making losses in last couple of years, which makes us skeptical about future profitability. Also, companies coming at a price to book of 3 times and EV to EBITDA of 27 times against Suzlon's EV EBITDA of 13 times. So even on valuation, it is coming at a big premium. So we feel one can avoid this issue. Thank you.
Good morning. eClerx has posted in line with expectations set of numbers for the quarter. However, the company has approved a buyback of rupees 300 crore at a buyback price of 1900 through tender offer. Current market price stands at rupees 1375. This is positive to the company. Dollar Industries has posted decline set of numbers for the quarter. Revenue declined by 5.4% QOQ. However, EBITDA margins has declined by 18.5% QOQ and came in at 8.9%. Lower EBITDA margin led to lower profitability to the company. Stock is trading at a PE of 14.1 times FY24 EPS. Outlook is neutral. VRL Logistics has posted below expectation numbers for the quarter. Although the revenue has improved, however, EBITDA margins dipped to 13.6% versus QOQ of 16%. Dip in performance of business segment in Q2 FY23 by 25% QOQ impacted the consolidated EBITDA margins to the company. On a long term, management is focusing on high growth, high margin, good transport segment, which is evident from its sale of business operations, sale of wind power segment, and sale of aircraft. Stock is trading at PE of 21.7 times FY24 EPS. Thank you.
Good morning. Ayush Motors announced its result. The result is marginally below expectation. Revenue came in at 3,519 crores against an expectation of 3,551 crores, which grew by 3.6% sequentially and 56% on a YOY basis, led by a 4% increase in average selling price sequentially due to price hike and a better product mix. EBITDA margin came in at 23.3% versus an expectation of 23.8% due to lower average selling price, which was affected by increasing share of Hunter 350 and lower share of exports. Volume for the quarter stood at 2.08 lakh units. Domestic volume for Aisha grew by 16% sequentially, while export volume declined by 16%. Gross margin came in at 41.5%, down 120 basis points sequentially and up 50 basis point on a YY basis, impacted by lower realization. The share is trading at a PE of 28.5 times FY24 EPS. TVS Sri Chakra announced its result. The result has improved. Revenue came in at 834 crores, which grew by 13% sequentially and 21% on a YOY basis. EBITDA margin came in at 9.9% versus sequential margin of 4.2% and 9.2% on a YOY basis. Eurogrip, the global tire brand of TVS Sri Chakra, has launched two new products in the two-wheeler tire segment: Roadhound, a sport touring tire, and Climber XC, an off-road specialty tire. The stock is trading at a PE of 33.9 times TTM EPS. Ashok Leyland announced its result. The result was in line with expectation. Revenue came in at 8,266 crores versus an expectation of 8,040 crores, which grew by 85% on a low base last year and by 14% on a sequential basis. The volume for the quarter stood at 42,946 units versus 39,651 units sequentially and 27,500 units on a YY basis. At the government's focus on infrastructure development and a revival in replacement demand for commercial vehicles continue to improve sales. EBITDA margin came in at 6.5% versus an expectation of 6.4%. The stock is trading at a PE of 20.6 times FY24 EPS. Thank you.
Good morning. Fine Organics Industries Limited posted the result above expectations. So despite macroeconomic issues and supply chain challenges which had an impact on several players in the industry, Fine Organic has delivered better than expected performance. Revenue grew by 110% YOY at rupees 919 crore versus the expectations of 781 crore. On a sequential basis, it has delivered a consistent growth of more than 20% over the last 3 quarters. Similarly, the EBITDA margins are maintained in the range of 26 to 29%, which is higher than its historical performance. So EBITDA reported at 254 crore versus the expectation of 192 crore. Adjusted PAT came at 203 crore as against 160 crore in the last quarter. The stock is trading at a PE of 43.2 times to FY24 EPS, and we are positive on the stock with a long-term view. Train Limited posted results where the revenue grew by 66% YOY at rupees 1,953 crore versus the expectation of 1,896 crore. However, EBITDA margin lowered at 13.1% versus the expectation of 15.3%. Adjusted PAT came at rupees 93 crore versus the expectation of 95 crore. And the management is actually believing in its own branded offerings with a complete direct to customer reach with no seasonal discounts and no advertising, which will have a positive impact on the overall bottom line compared to industry peers. The stock is trading at a PE of 81.8 times to FY24 EPS. Bata India Limited results were below expectations. The revenue grew by 35% YOY at rupees 830 crore and degrew by 12% on a sequential basis. EBITDA margin reported at 19.4% versus the expectation of 25%. During the quarter, mass category was impacted due to inflationary issues. The company is focusing on cost optimization, product premiumization with the launch of new products and investments in the marketing activities. The stock is trading at a PE of 43.7 times to FY24 EPS, and currently we are neutral on the stock in the near term. Thank you. Now I will request commodities team to take the call forward.
Yeah, thank you very much. Good morning, everyone. In today's session, commodities might correct it have opened gap up. So chances are that likely some profit taking will be there, and it is advisable to buy on corrections. As such, dollar index have fallen to the level of 108 to 107.50. So the rally in commodity um, uh, had been witnessed. So eventually now we might see that dollar index might pull back, and which could result in correction in commodities. But however, we maintain our view that commodities should rally further. So any decline in prices should be a buying opportunity, as we see dollar index correcting further, maybe till 105 levels. So going forward, buying on dips is recommended in commodities. We gold, one should initiate a buy around 51,900 with a stop loss of 51,650. Prices can test 50 to 300 to 500 on higher end. Silver also, we expect prices to correct till 61 500 to 400 levels, and one can maintain a stop loss of 60,700. And we expect prices to rally further to 60 to 800 on higher end. So in crude also, we have seen prices are holding 6950, 6900 levels of support. So pullback is expected in coal, maybe 7100 to 7150 on the higher side. In natural gas also, we are witnessing 480, 470 seems to be a supportive area, and one can initiate a buy with a target of 5010, 5020 on higher end. In copper, prices have already opened up to the tune of 693. But however, we recommend that buying on corrections maybe 688, 87 should be a ideal level to enter long. And we might see prices testing 700 to 705 on higher end. And prices should continue to rally. In zinc also, we should expect 270, 275 as a target. Prices have been supportive at 260 levels. So as long as it is holding 260 levels, buying is recommended. Though one should wait for a dip, as it is already opened gap up. So maybe a 2-3 rupees correction, one can initiate a buy around 262. And aluminum also, prices are attractive. Prices should test again 207, 2010 levels on higher end. So buying in aluminum is also recommended. As far as USD INR is concerned, the fall has been witnessed due to the dollar index crash yesterday. So prices could correct further, maybe 80,000 50 to 80,030 in this November contract. So prices should be weak as long as it is holding below 8110. So the ideal 8110 and 8130 are resistance area. So any pullback could be an opportunity to sell. However, if 81.10 holds up, then one can witness a pullback till 81.30, 35. But overall, seems to be corrective and could test 80,000, 80.30 on coming sessions. Yeah, that's it from us. Thank you very much.